Hello everyone, myself Shilpa Arora. I am from BBA department. Today we are going to deal with the GST. So what is GST? Where G stands for goods, S stands for services and T stands for tax. So GST is goods and services tax. Before coming over to GST, we will discuss what is tax. So a tax is a mandatory fees. It's a enforced contribution. We can't deny that. We have to pay taxes to the government. So taxes are levied by government on any individual or the organization. And government collects that revenue in the form of taxes and use that revenue for public works so as to provide them the best facility and the infrastructure. Now we have two types of taxes, direct tax and the indirect tax. So direct taxes which are paid directly by an individual to the government. The burden of direct tax can't be shifted from one person to another. We have to pay the direct taxes ourselves. For example, income tax. Whoever is earning income have to pay that tax. We can't shift that burden. Now, indirect taxes. The taxes which are levied on goods and services and which are paid indirectly to the government. In the case of indirect tax, liability of the tax can be transferred from one person to another. Now, if we will see the old structure of GST, or we can say old structure of indirect taxes. The tax structure in India, two types of tax, direct tax and indirect tax. Direct taxes covers income tax, corporate tax. Indirect tax covers central tax and the sale tax. So direct taxes we have income tax, but in indirect tax, central tax again we have excise tax. Excise tax is levied on the at the time of manufacturing of goods. Service tax, which is to be paid by the service provider. Custom tax is the tax on international trade. State tax is central sale tax and VAT. And the state tax covers entertainment tax, luxury tax, lottery tax. But now there is only one single tax, GST. So, like government thought of bringing some more transparency in the tax structure. That's why a new tax came, GST. A new tax GST came because of some defects in the earlier indirect tax structure. So we will discuss what was the defects or what was the shortcomings. So government changed the entire indirect tax system. So these shortcomings are the number one, cascading effect. Cascading effect means increasing effect. Earlier what was happening, the both central government and the state government was levying taxes on the same goods, right? The central government was levying taxes on the manufacture of goods, and the state was levying VAT on the sale of the same goods. So what was happening? No credit of the earlier tax paid was there, right? There was tax on tax that was boosted inflation, right? Number two, multiplicity of taxes. In earlier times, in pre-GST regime, what was there? There were so many taxes, excise duty, VAT, entry tax, luxury tax. So that's why there was multiplicity of taxes, which was making the tax structure very cumbersome. Number three, overlapping of jurisdiction. Overlapping means when the state government and the central government both were imposing tax. The central government was imposing tax that it is a good, and the state government was imposing tax like it is a service. There was no clear-cut differentiation between the goods and the services. In some cases, like in the computer software, SIM cards, renting of movable property, It was very difficult to judge like whether this transaction is sale of goods or rendering of services. So both the governments were imposing tax on these type of transactions. Number 4, rivalry among states. As we know that indirect taxes, the pre-GST regime, the indirect taxes was there. It was no destination-based tax. It was origin-based tax. It means the taxes were collected by the administration where goods are manufacturing or supplied, right? So what the states were doing in that case, they were encouraging state to provide sale tax, VAT relief, and at the same time they were discouraging supply of goods from other state by imposing the entry tax, luxury tax on the goods that was coming from another states. So there was some sort of rivalry amongst the states because of that revenue. Number 5, hindrance to integrated market system. As we know, like India is our one nation, but despite of having one nation, we can't develop India into a national market due to some barriers. The barriers were of the indirect taxes, that is central state tax, VAT, entry tax. These invisible barriers were like the check post on the boundaries of the state, that we are not allowing the goods to move from one state to another. We were imposing taxes. Number 6, loss of man and indirect. Number 6, loss of man and truckers. Like we said, the states on the entry point was imposing check post. So what we were doing, we were appointing so many men and the trucks. So there on the entry point, and the mans and truckers, they were losing. So we were having loss of man and truckers. So coming over to the next rationale for GST. So GST is known as Goods and Services Tax. This is an indirect tax which replaced many indirect taxes in India, such as excise duty, VAT, service tax. The GST Act was passed in the Parliament on 29th March 2017, and it came into effect on 1st July 2017. So now, if we will talk about the features of GST, we know that it is a destination-based tax where the goods are supplied. Their tax is imposed. Therefore, it is a destination-based tax. Elimination of cascading effect, the increasing effect that was presenting in our earlier tax structure. There was tax on tax, right? But in GST, there is no cascading effect as the tax is charged only on the value added. Tax credit. Tax credit here means ITC. ITC, if you have paid earlier tax earlier on the purchase of goods, and at the time of sale of goods, if you are paying tax, so ITC of that tax, the earlier tax you have paid is allowed in the GST, right? So GST would be applicable on the supply of goods or services, right? In the like previous concept of tax, it was on the manufacture of goods or on sale of goods or provision of services. GST is based on the principle of destination-based tax. And if we will talk about our earlier tax structure, it was on origin-based taxation. So GST would be a dual GST, right? With the central and states, that central and state government were levying tax on a common base. So GST, which will be levied by center, it would be called CGST. It means Central Goods and Services Tax. And that will be levied by state, it will be called SGST, State Goods and Services Tax. And we have our 7 union territories, out of which 5 don't have their own legislature. So union territories without legislature, they will levy union territory GST. So GST will replace the following taxes, right, which are collected by the center. Central excise duty, duties of excise on medicinal and toilet preparations, additional duties of excise, which were on goods of special importance, textile and textile products, and service tax. Now, state tax will subsumed within GST, that would be subsumed within GST. What are these type of state taxes? These are state VAT, central sale tax, purchase tax, luxury tax, entertainment tax, taxes on advertisements, taxes on lotteries, state cess and surcharge. So GST would apply to all the goods and services, but there is one exception, that is alcohol. So GST is not applicable on the alcohol, that is for human consumption. And besides that, GST is now not applicable on 5 specified petroleum products: crude, petrol, diesel, ATF, and natural gas. GST would be applicable on these 5 products from a date which will be recommended by GST Council. Now, it will depend on GST Council. As and when GST Council will apply GST on these 5 petroleum products, these will be covered under GST. Coming over to next, benefits of GST. So implementation of GST will bring so many benefits. Like number one, integrated national market. We are aiming at making India a common market, and with the help of GST, we can do that because we have common tax rates. Only one tax is all over in India with the same rates. So it will remove economic barriers, right? Number two, elimination of cascading effect. The cascading effect that was present in earlier tax system, it will get eliminated, right? Because GST provides input tax credit mechanism. That's why there is no tax on tax. The tax is levied only on the value addition. Number three, removal of multiplicity of taxes. GST will remove all the multiple taxes which are levied in the present regime, or we can say pre-GST regime. Taxes like excise duty, value added tax, entry tax, entertainment tax, this will all get subsumed under GST, and now there will be only one tax called GST. So like only one tax, it will bring transparency and ease of doing business. Benefits of GST. Number 4 point, increase in GDP. As we know, like GST will bring ease of doing business. It will like bring trust and faith in the taxation regime. That will result in huge capital inflow from the foreign investors. And as a result, GDP will increase. Number 5, efficient administration by the government. As we know, GST is a fully automated tax regime. From filing of returns to the refunds, everything will be online. There will be so less interaction between the taxpayer and the revenue authorities. So online system will bring transparency, lower corruption, and better administration by the government. Right? Now we have some concerns regarding GST. Like if we are talking about the benefits of GST, is there anything that we need to have concern like regarding GST, that there will be some problem in implementation of GST? Yes, of course. So number one, compliance related issues. Compliance related issue means in GST, business need to file so many returns, the multiple returns, the annual return, quarterly return, monthly return, right? So due to all the online system, many business may find it difficult to compliance with the GST, like filing of returns, the registration process, because of the e-technology. So this may be the issue for some manufacturers or the businessmen who are not aware of the online trade. Number 2, increased cost due to software purchase. Now, if business have to like register online and they have to file their online returns, first what they need some GST software. So they need to buy or they need to sell, update their existing software, right? So both the option we like are having increased cost of software purchase. And after purchasing the software also, it will be necessary, like we have to train our employees so that they can use that software efficiently. So in any case, like cost will increase. Number three, cultural orientation. Cultural orientation here means a large volume of economic activities, a large number of transactions are carried out without the invoices in India, right? People are in a habit of neglecting taxes. Now, bringing them into that compliance mode, it will be like somehow challenge for the government. So these are some of the concerns regarding GST. Now coming over to the types of GST. We are having four types of GST: CGST, SGST, IGST and UTGST. So CGST here means Central Goods and Services Tax. So CGST is levied and collected by the central government. SGST, it is levied and collected by the state government. IGST, it is collected by central government. UTGST, it is collected by union territory government. Now CGST and SGST, it will be applicable on intrastate sales. Intrastate sales means in a single state, when goods move from one same state to same state, like in a single state transaction is going on. Purchase and sale is in the same state. So that will be intrastate sales. And in that case, CGST and SGST will be levied. If we will talk about IGST, if the sale is between two different states, that is interstate sales, and in that case, IGST will apply. And when the goods are in the from one union territory, it's like within a single union territory. Like if we will talk about Daman and Diu. So Daman and Diu, it means Daman and Diu. Daman and Diu, that's transaction is in the same union territory. Then UTGST will be applicable. Right? Now the constitution of GST Council. So according to Article 279A, GST Council will be a joint forum, like the central and the state government will both be there. So the Union Finance Minister will be the chairperson of the GST Council, and following will be the members. As a member, the Union Minister of State will be in charge of revenue of finance. The minister in charge of finance or taxation or any other minister nominated by each state government as members. Vice chairperson of GST Council will be elected by GST Council from amongst its members. Now, GST Council Recommendations. According to Article 279A, subsection 4, it specifies that the Council will make recommendation to union and states on the important issues related to GST, such as which goods and services will be exempted from the goods or services tax, right? Or it lays down the laws, the principles that governs the following, like the place of supply. It will be decided by GST Council. Threshold limits, like the limits, like above which GST will be applicable, like you need to register. GST rates on goods and services, as we have different rates on goods and services, so it will decided by GST Council. Special GST rates for certain states. It's like in some states we need to have some special GST rates that will be decided by GST Council. Now comes GST Network. So GST Network, GSTN, we can say it GSTN. It is a non-profit, non-government organization. It will manage the entire IT system of GST portal, which is the mother database for everything GST. So the government used this portal to track every financial transaction and provide taxpayer with all the services. Like in this network, from the registration till filing of tax and like maintaining all the tax details, we can do all the necessary formalities. Now the structure of GSTN. Here we like say that it's a non-government organization. Why? Because the private players owns a 51% share in the GSTN and the government owns the rest. Right. Now comes to GST slab. GST covers almost about 1300 types of goods and 500 types of services. We have GST slab rates, the four slab rates, 5%, 12%, 18%, and 28%. And GST Council can revise these rates whenever GST Council thinks it's necessary to keep up with the changing times. Right? So we have some GST slab rates 0.25%, 3%, 5%, 12%, 18%, and 28%. In 0.25%, we have cut 10 semi-polished stones, 3% is covered with gold, 5% is with household essentials, coal, Indian sweets, life-saving drugs. In 12% category, we have processed foods, computers. In 18% category, we have capital goods, industrial intermediaries. In 28%, we have luxury items and sin goods. Thank you.